Hi there, welcome to this DeFi and Yield Farming Basics video guide. This is Manny speaking. I'm the growth lead at Holdex. Let's cut to the chase. Most people who get into crypto are looking to make money, to increase their wealth by adopting these assets early. Crypto is now over 10 years old, and the early adopters of blockchain-based assets like Bitcoin and Ether have seen incredible upside on their bets, some building huge fortunes in the hundreds of millions and billions of dollars. After a decade of crypto, however, the industry is maturing to the point simple buy and hold strategies appear suboptimal to make the most of your time in crypto. In the last half decade of crypto, trading coins or tokens has become the preferred way to invest in the space. Very recently, decentralized finance or DeFi protocols have introduced a novel way to make money in crypto, so-called yield farming. So, how is yield farming or simply farming different from trading crypto? Is farming a sophisticated form of trading, or is it something completely different? More importantly, which path should you adopt to most effectively grow your wealth or make a living as a crypto investor? Before getting deeper into yield farming, the subject of this guide, it is very important to understand that farming is quite different from trading. We will have to understand how we come to think of crypto trading and, in turn, how to think of crypto farming if we hope to have a shot at making money long-term from this activity. First, a bit of history. Historically, all major crypto assets have behaved as commodities. A commodity is any good which is highly fungible and can be bought or sold for its underlying value. Think of precious metals like gold and silver, raw materials like iron and copper, or grains like rice and wheat. Currency can be treated as a commodity even when it's used for facilitating exchange. Cryptocurrency markets have been structured like commodity markets, which are quite different from the stock market most people are familiar with. Trading, simply put, aims to make money by buying low and selling high. Two major methods are used to determine an asset's fair price or potential: technical analysis, TA, and fundamental analysis, FA. TA uses price charts, trends, and other metrics to try to explain and predict the behavior of other traders in the market, whereas FA looks at the health of an asset by studying its mission, financials, competitors, and both micro and macroeconomic factors. In crypto, most of the community is already used to seeing charts all over social media, annotated with resistance and support levels, talk about candles and volume, all of which are TA tools or signals. FA in crypto is actually very complex and poorly developed. This is in contrast with FA in the stock market, where financial statements and tried and tested monetization models give investors a clear understanding of expected cash flows, which can then be used to make a valuation to compare with the current stock price. To summarize, TA is common to all trading markets and used in short-term horizons, whereas FA is more useful for cash-generating assets and long-term horizons. You may have heard of Warren Buffett, the legendary stock investor who was once the world's richest man. Warren Buffett doesn't invest in cryptocurrencies. Actually, he doesn't invest in non-cash generating assets like commodities because he doesn't believe they have intrinsic value. Warren Buffett buys companies, not just for capital appreciation, but to hold them long-term and reinvest the dividends. He follows a particular school of FA called value investing. By value, Buffett-style investors mean long-term fundamentals based on expected cash flows. Value investors pick stocks to hold long-term and compound their capital. What many DeFi protocols do is bring cash flows into crypto. Interest on lending, liquidity incentives, and staking governance tokens can all generate a steady stream of more crypto, which can then be swapped for cash or reinvested. This is the art of yield farming. This is the gravy. Holding positions in DeFi protocols is of a similar nature as holding stocks or commercial real estate, meaning we can now do reliable FA and even value investing on crypto. In parts 2 and 3 of this video guide, We will get into the concepts and methods of yield farming. But going forward, the big takeaway is farming, unlike trading, generates cash flows, which opens a whole realm of new opportunities for making money with crypto.